When in history has gold prices spiked and by how much? In this video, we're looking at a 100-year gold price chart to see what has happened and why you might be concerned. Let's go to the screen share. And boom, we're in the screen share. Let's start off. We're looking at gold prices, 100-year historical chart. You can find this on macrotrends.net. They have a bunch of different things you could check out. It's pretty interesting. So let's scroll down, and this is the chart we're going to be looking at. All right, we're going to take it off of inflation adjusted to actually look at the prices, and we're seeing that it starts back in 1915. The Federal Reserve started around 1913. That's when purchasing power was much more than today. So we're going to look at all the time frames where gold spikes. So the first one being is starting around 1930. We see that it started around $20.69 and then spikes to $35. Now, what was happening during this time? Well, this was during the Great Depression, and it was a little different back then. You could see that the price of gold was flat. It's because it was fixed. It backed the dollar back then. And back then, they required people to turn in their gold. They're like, hey, give us your gold. You can only keep maybe collectibles and a couple coins. Otherwise, give us your gold. Afterwards, they revalued gold from that $20 to $35. So that was the Great Depression. That was kind of the first main spike that we're seeing. Next, we're going into the 1970s. We can see that the bottom was around kind of $36. The first major spike was in 1975. If you're not aware, during the 1970s, that was an inflationary decade. Then it pulled back a little bit, and then it continued its run until 1980 and peaked around over $660. All right, so far, first time gold spiked, Great Depression. Second time, inflation of the 70s. So then it goes down, 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 down. And we're seeing it kind of bottomed around 2000, right? The bottom was around what? Let's say $260. What happened then? Well, that was the dot-com bubble as well as 9/11. So then gold started increasing. You can see it started increasing. Again, 2008 was the Great Recession, increased even more, and then peaked around 1825. All right, so that was a decade of a bull market for gold. Then it goes down, and it kind of bottoms. Where is that? Maybe around 2015-ish, in the $1,000 range, let's say, a little over $1,000. After that bottom, then it goes up. Over here was COVID, 2020. It spiked to, what is that, around over 1900, just under 2000. And then since then kind of came back down and then kind of found a bottom over here in 2022. And then since then has been rising. So let me go to Yahoo Finance just to see what gold price is right now. It is April 17th. Let me try to refresh this. Sorry if it's taking a little bit. It's Thursday. Let's see what the heck's going on in markets. Obviously, it has been extremely volatile. Oh boy. With tariffs and everything like that. Today, I don't know. We'll have to see what happens. I usually go over here to rates. It's a little slow. Oh, actually, you could kind of see it over here. It's around $3,340. Okay, so much higher than obviously before. So it's spiking again. So quick recap. Other times it has spiked. Great Depression, inflation in the 70s, dot-com bubble, 2001, Great Recession. Those are the other. COVID, 5 times. And right now we're in the middle of the next spike. So that should be concerning. Every time it spikes, something economically bad happens. So if we wanted to look at, well, each time this happens, what kind of returns did that produce? So I created a little, I'll scroll down here. This is where I put it. Okay, so gold, 100-year chart. And I put down the years and the price to give us the type of returns that we might expect. So the jump from 1930 to 1934 went from around $20 to $35. That was a return of 69%. Okay? So then, sorry, allergies and pollen are killing me. So then starting, the next one is 1970, bottom of $36. First spike went up to $182. That increase was almost 400%. Then from 1975 to 1980 went up to over $670. And that was over 260% increase. And if you look from the beginning of 1970s to 1980s, that total increase was over 1,700%. Pretty wild. So then next time, right, we're looking at beginning of 2000 to 2011. That whole decade of a bull run started at 260 going up to 1,800. That was an over 600% increase. Next bottom was around 2015, spike of 2020. That increase was 84%. And then so far right now, the bottom of 2022, are we going to take out the bottom again? Who knows, but we're just looking at historicals of just over 1,600. Right now, we just saw is over $3,300 an ounce. So far from the bottom in 2020 has already increased 104%. It already doubled. Now, we're looking at the other time periods. What if it increased similar to historicals? So let me scroll down a little bit. And these numbers are going to look crazy, but this is literally what has happened before. So let me just turn these. Wow, sorry if this is a little lagged here. Okay. So all I did is, all right, we're starting from the bottom, right? In 2022 of $1,600. What if it returned similar to in 1934? That's 69%. That would bring us to 2,700. We already surpassed that. And during that time period, it was different. Back then, gold was fixed. The dollar was backed by gold. Right now, the dollar isn't backed by anything. Gold is its own thing. So I'd say it's a little bit different than back then. Next, 1975, that increase was almost 400%. If it was similar to that rise starting in 1600, it would go to 8,000. Again, if it's similar to the increase up until 1980 of over 260%, it would be 6,000. And if it gives a similar return of the entire decade from 1970 to 1980 of that 1,700%, gold would go to $30,000. That's insane. And this isn't like made up numbers. This literally happened before. And you could say back then there was actually more purchasing power. Right now, over 90% of our purchasing power disappeared. So you could say that the dollar is actually going down faster. So then from here, let's look at 2011. The increase from 2000 to 2011 was 600. That would bring us to $11,000. Hopefully you guys are kind of following this. And then the most recent return from COVID, that would bring us to basically where we are today. Actually, we're over it now. That 80% return would give us $3,000 gold, which we're at. We're over it. So then I'm like, all right, well, you can't really say which one this is going to look like. I just took an average. I'm taking an average of all of the times, right? 1, 2, 3, 4, 5 scenarios that we looked at in the past. Great Depression, 70s, dot-com bubble, recession, COVID. The return of all of those together was 280%, which would bring us to $6,000 gold. And that's just looking at the average historical movement of gold. So when you're seeing or hearing these crazy numbers being thrown out what gold could go to, and even investment banks are increasing their price targets. I think it was recently Goldman Sachs increased their price target to the end of 2025 to be 3,700. So when you're hearing these crazy numbers of like 5,000, 6,000, like that's what it's actually done previously. So the question isn't how high can gold prices go. The question is how bad can things get. Gold is maintaining its value. What's going on is the dollar's purchasing power is decreasing. It's taking more dollars to buy the same gold coin. So we're just seeing more and more devaluation. Is now the right time to buy? Who knows? I will say central banks are buying massively, and they're kind of price agnostic. So if they're just continuously accumulating more and more gold, then the price is going to continue to go up. At the same time, we saw in the 70s, even during COVID and the recent sell-off, that when panic sets in and there's a lot of selling, everything gets sold off. There's a pan sell-off, stocks sell off, gold sells off. Bonds have been interesting to watch. But in the beginning, if people need cash or if they're getting margin calls, they have to sell everything. And then that could be another opportunity. So I just think it's something to watch in a normal time. Gold shouldn't move, and the fact that it's spiking right now should be concerning. So what do you think? If you have any questions, comments, concerns, you can leave them down below. My message to you now is stop scrolling through social media and then focus on what you want in life. So thanks so much for watching, guys, and I'll see you in the next one.